Two major developments are occurring both on the 2-week chart and the total 3 market cap. These events have the possibility not only to shape the directional continuations moving into the coming months, but also the broad success of the altcoin market. Let's go ahead and jump onto it. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're taking a look at Bitcoin on the macro and the short-term charts, going over what is happening, what to expect next, the key levels to be paying attention to, and of course, how to prepare moving into major economic events. We'll also be taking a look at the total 3 and Bitcoin dominance, as the altcoin market is showing some very interesting signs we have not seen before. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Alongside this, you'll also get access to our group chats, our general chat, trading chart and education chat, news, help, daily video, and trade setup chat. If you are interested in joining all of that, go ahead and contact me in the pinned comment of the free channel by clicking my name or click these links for more info. Let's go ahead, guys, and dive on in. So in the last 24 hours, Bitcoin really hasn't done too much. We are still seeing that anticipation building in the price action as we approach the major CPI and interest rate decisions in the next 72 hours. So with the last 72 hours of price action, we have seen more or less just sideways consolidation. Over the last 24 hours of price action, we did see some volatility pick up, and we have breached that $69,600 level, flipping that now into a support level, still sitting above that monthly uptrend on the daily chart, which is a good thing to see. We're going to be discussing what to expect next in our short-term analysis today, so make sure to stick around for that. Moving over to the market data, taking a look, 24-hour volume is down 11%. Sitting at 60 billion, and 24-hour liquidations are down 45%, sitting at a total of 40 million. Of the 40 million in liquidations, 20 million coming from long positions and 19 million coming from short positions. Again, looking at the price action, we have seen a lot of upward and downward movement, a lot of short-term volatility flushing out over leveraged positions within this sideways consolidation. Moving over to the broader markets, the Dow Jones, S&P 500, and DXY, we're going to be taking a brief look at those. The DXY has seen a pretty strong green candle breaking out of its short-term downtrend, spanning since the start of May. With that breakout, we are now retesting that yearly level of resistance. Again, guys, the direction of the DXY is heavily determined by what comes next with the interest rate data and as well the CPI data. So we're not really sitting here trying to make too many predictions. If we do see bearish data come out for interest rates and of course for CPI, we will see the DXY continue upwards. If we see data come out that is exceptionally bullish, we will see the DXY correct regardless of what levels we are looking at over here. So we're not really sitting here trying to predict too much. We're more or less going to be remaining reactive when it comes to the DXY for the next 72 hours. Moving over to the broader markets, the S&P 500 looks fantastic. We have had that weekly candle close now above that prior high point. Again, if we zoom out and look at the higher time frame structures, we have got our lows, we've got our higher lows, we've got our higher lows, we have got our higher lows, and we have got our higher lows, establishing again, once again, an incredibly strong macro uptrend. Throughout this entire trend, we have not really seen any high time frame weakness, again, breaching that prior high. This high was a trigger point. We are entering that directional continuation now. Again, for this directional continuation to be invalid, we need to break a weekly candle underneath this low. Until that occurs, we are expecting directional continuations upwards, overall looking fantastic. Exactly the same thing goes here For the Dow Jones, it is lagging quite a fair bit in comparison to the S&P 500. In fact, I might go ahead and just refresh my chart very quickly just to make sure we have everything up to date on this chart. Moving over again, yep, not too much has changed over here for the Dow Jones. We're still looking for a breach of that prior high point, and again, a weekly candle underneath that low at 37,700 would be the trigger point for a high time frame downtrend. Until that occurs, we are expecting macro continuations upwards following the S&P 500. That being said, guys, let's go ahead and jump into our Bitcoin analysis. Before we do, a quick word from today's video sponsor. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump on into it. And in today's video, we are going to be starting on Bitcoin dominance and the altcoins, and then jumping over to the macro charts, discussing a very interesting indicator that is occurring as we speak, and then moving over to the short-term price action. So the Bitcoin dominance chart, in that recent pullback for Bitcoin, which we discussed in our prior video, as a consequence of the bearish NFP data, we have seen Bitcoin dominance break back above this yearly uptrending diagonal support level. And again, we have seen a break above this level, but we have not seen that weekly close. The weekly close is in 4 minutes time. So by the time you're watching this video, it is highly likely we've actually broken back within and closed within this diagonal trend line. So this diagonal trend line has now been invalidated. So we're going to go ahead and remove this diagonal trend line. The key level we are now watching is going to be the reaction at this upper level of resistance. If we look at the 2019 to 2021 cycle, moving into that macro parabolic phase, we saw this level at 56 to 57% hold as a macro resistance, and this was a macro resistance in terms of altcoin market and was basically the bear market resistance. When we broke below this level, we saw that parabolic phase occur for the cryptocurrency market as a whole, particularly for the altcoin market cap. This is going to be the support level of the Bitcoin dominance chart between 2019 moving into 2021. And as you can see, we have retested this area as a point of resistance, and therefore it is currently a major point of resistance, preventing the Bitcoin dominance chart from pushing higher. So we can devise two main scenarios from this. Number one, we can identify this resistance as a trigger point for a rising Bitcoin dominance. And if we do see Bitcoin dominance break through this level, we would expect a continuation for Bitcoin dominance much higher. Now, if we see a rising Bitcoin dominance, depending on what the total cryptocurrency market cap does at the time of the Bitcoin dominance rising, will determine the impact this has on altcoins. If we see the total cryptocurrency market cap increase with a rising dominance, we will see both Bitcoin and altcoins increase in value. But as we have seen during basically the entirety of 2023, Bitcoin really overpowered the performance for altcoins. So that is because we saw the total cryptocurrency market cap increase as Bitcoin dominance was rising. Scenario number two is if Bitcoin dominance increases and the total decreases, we will see a scenario where altcoins bleed out massively in comparison to Bitcoin, but both assets will fall in price. Again, for us to see an altcoin season, we need to see one particular scenario. That is going to be, we need to see Bitcoin dominance decrease with the total cryptocurrency market cap increasing in value. That scenario will result in both Bitcoin and altcoins increasing in value, but altcoins will increase at a greater rate in comparison to their Bitcoin pairs, resulting in what we have traditionally seen as a altcoin season. If we look at prior cycles, generally what we notice is that during the time of which Bitcoin tops out, and we're talking about the pi cycle highs, right? We're talking about pi cycle highs, Bitcoin dominance is around that 38 to 40% region. So assuming we see a historical repeat and an altcoin season, we can expect the altcoin season to occur with Bitcoin dominance dropping and the total market cap rising. That is it for the Bitcoin dominance. Let's move over to the altcoin. So take a look at the altcoin chart over here. We have seen a very interesting pattern play out. And so the pattern we've been talking about for multiple months now, discussing this pattern, and we'll go into it as to why it's so important and what is happening as we speak on this chart that is very, very worrisome. So moving over to this chart, taking a look, we have 5 to 6 points. Point number 1 is going to be our dead cat bounce high. Point number 2 is our bear market resistance. Point number 3 is the breakout of our bear market, and this is a monthly consolidation sideways. Point number 4 is the initiation of the altcoin bull market. And point number 5 is a parabolic phase into point number 6, which is the high. Again, point number 5 only occurs once the price action breaks out of point number 1 and through point number 4. So that breakout of that yearly resistance is when we officially enter that parabolic phase for altcoins. So historically, what we have noticed is after we break through point number 2, which is the bear market resistance, what we notice on the pi cycle indicator is that we do not break a weekly candle close underneath both of our pi cycle midlines, which is our high short and low short moving average and EMA, okay? We do not close a weekly candle under. We can retest them as many times as possible, but we do not close a weekly candle underneath these levels. When we see a weekly candle close under these levels, that only happens after the pi cycle high. And as you know, the pi cycle high historically has marked macro reversal points for Bitcoin, and generally, exception being the 2021 high, marked the absolute top for Bitcoin. The reason the 2021 high was higher, this is a deviation over the pi cycle high. It was the price top, but it wasn't the pi cycle high top. So we look at the pi cycle high top, we generally see after we break point number 2, we remain above these midlines the entire way until we create a pi cycle high, which ultimately results in us entering phase number 5, which is the parabolic phase. So we can devise one scenario, is if we break below on the weekly chart underneath the pi cycle midlines, that could potentially destroy this pattern we saw play out in the prior cycle, and a pattern that we are seeing play out again. If we look at the current cycle, we saw the top, we saw point number 1, dead cat bounce high. Point number 2, bear market resistance. Point number 3, a breakout and horizontal consolidation for multiple months, entering the bull market for altcoins, but not quite at that phase number 5, which is the parabolic phase. What we have just seen as we speak is going to be a weekly candle close underneath the high short moving average of the pi cycle indicator, the yellow line. Now, if we look back in the prior cycle, we did not even ever see a weekly candle close under that level the entirety of the time since number 3 into number 5, the parabolic phase. This is a warning sign. This is suggestive that we have seen a larger amount of exhaustion within altcoins this cycle in comparison to last cycle at the same particular phase. Remember, at the time of which altcoins are in phase number 4, Bitcoin is retesting, okay, the monthly all-time high level. So at this level over here, okay, the moment we see altcoins in phase number 4, Bitcoin is retesting that prior high. We saw that in this phase over here, and we're seeing it again this time, okay? So what this is suggestive of, it is suggestive that in comparison to the prior bull market, this bull market, we are seeing significant altcoin weakness at this particular point in time in comparison to the last. That doesn't necessarily mean, all right, we're never going to see a parabolic phase, but it suggested that altcoins may perform a little bit worse this cycle than maybe we have expected, or maybe we were expecting as per historical data. This is a very interesting point, and definitely a point we should be looking into as we progress down the line. For us to invalidate this historical pattern and thus invalidate the potential parabolic phase, we need to close a weekly candle underneath the low short EMA as well. Okay, so it is not all over. Altcoins are still good, but they're looking a little sketchy now. They're looking a little sketchy according to historical data. Let's move over to Bitcoin, guys. Moving over to the monthly chart, really quickly discussing this point. We're taking a look at the lower band of the pi cycle indicator, okay, which is the red band, okay, and we're looking at the midline of the Gaussian channel. We are on the 2-week chart. What we can see historically, and we're talking about the last 2 cycles, okay, bull market, or should I say 4-year cycle number 1. Let's go ahead and change this to orange. And 4-year cycle number 2, okay, if we look at the prior 2 4-year cycles, what we can see, okay, is every single time we have a break of the midline. I hope you can see that. Let's just make this a little bit bigger. The midline of the Gaussian channel from the lower band of the pi cycle indicator. From that point onwards, let's go ahead and draw a vertical line from there, okay? We see an eventual continuation into what we would call a parabolic phase and breaking past that prior pi cycle high, okay? If we take a look at the other cycle, the most prior cycle, we saw the same thing. We break above the midline from the lower band of the pi cycle indicator. From that point onwards, we see directional continuations on the macro. That doesn't only take us through the prior pi cycle high, but into that parabolic phase for Bitcoin. Looking at the current cycle, guys, what are we seeing right now? Well, we are seeing that lower band literally pinching. Let's zoom in as much as we can. We're pinching just underneath that midline of the Gaussian channel. That is potentially suggestive that we are going to see that directional break over the pi cycle high, okay, the last all-time high for Bitcoin, and a directional continuation into the parabolic phase. We are maybe about 2 to 4 weeks away from potential crossover for that midline on the Gaussian channel. Definitely something you should watch out for. Let's go ahead and wrap up the macro chart analysis now with one more analysis, which is going to be on our weekly chart. We go over this one almost every video, but it is just so important. What we'll see over here, guys, is after the point of which, okay, after the point of which the baseline, the lower band of the pi cycle indicator breaks into the Ichimoku cloud. We saw over here, and we go back into price cycles, okay? Let's zoom in out over here. We saw it right over here. From that point onwards, the price action, yet again, just like the altcoin analysis, remains above the pi cycle midlines until we create a pi cycle high point. Again, if we use a vortex trend indicator, we can see the pi cycle highs line up with our vortex trend indicator, indicating to us that 2 things. Number 1, while we remain above the midlines of the pi cycle indicator on the weekly, we are expecting the vortex trend to increase to retest the macro downtrend and thus print a pi cycle high, meaning while we remain above those midlines, we are still open for a parabolic phase that is not off. Very important stuff. Number 2, it also suggests that if we break a weekly candle below our pi cycle midlines prior to making a pi cycle high, we could be entering a macro downtrend. That lines up with 60,000. Moving over to this chart, we can see the pi cycle midline lines up with our $60,000 support, which is going to be the prior pi cycle high. Meaning if we break a weekly candle under this level, we will enter a high time frame downtrend. Let's just take a look at the trend. We have our low, we have our higher lows developing, we have our higher lows developing, we have our higher lows developing. For us to see any significant reversal in this trend, we need to break below that prior low point, suggesting a macro reversal. So until that occurs, we could theoretically chop infinitely sideways and the macro uptrend will remain intact. It is only when we drop below that 60,000 do we with confidence enter a high time frame downtrend. So thus, until that occurs, we are expecting macro directional continuations upwards as per all of what the technical data is suggesting. Let's finish up on the short term, guys, and wrap up the video. So we're going to keep this one nice and brief. Like we've seen over here, we are retesting this monthly uptrend. The monthly uptrend is looking a little sketchy now, right? We're retesting, we're dropping below, we're pushing above, a lot of push and pull happening around this level. So what we're going to do is we're going to actually remove that monthly uptrend and we're going to focus on our structural levels, our horizontal levels. Let's move over to a 1 hour chart. What we can see over here, actually, let's go to a 2 hour chart. It's going to be a little bit better. What we can see over here is we have a massive section of liquidity just below us, taking us down to around 68.3K. We are sitting above this level and we've been consolidating above this level now for about 2 to 3 days. What this is suggestive of, in context of the recent correction, remember this recent correction downwards was a result of bearish NFP data, right? So the context was the correction occurred based on an external news event, which directly impacted investors' perceived systematic risk of the upcoming news events, which is CPI and interest rate data, perceiving those events to potentially be more bearish, and thus the market is corrected moving into those events to offset any potential unprepared risk that those events could push into the market. So people are taking, again, initiative, then front running the market. Like we said already, these events move, the market moves on perceived risk. So with that correction, we've seen sideways chop. It is unlikely for this sideways chop to push any lower, provided we see confirmation that the worries caused by the NFP data, which resulted in a correction, are going to be validated. Okay, so it is more likely we're just going to consolidate sideways over here and eventually climb back upwards, moving into that economic news. If we do get poor news, it is likely we're going to see an extended correction to claim the low of this liquidity range. Now, there are other scenarios other than just that. If we look at the short term and take a look at our structural levels, these levels act as trigger points. So we know already that this base level of support that we have now retested multiple times is going to be a bearish trigger point. We have a massive amount of volume down in this range, amount of liquidity we could come down and grab if we were to break this low. So for us to see a directional move toward this lower side of liquidity, around 68.4, we would need to see our strong base of support, which we have been developing, fail to remain a support. This level would need to break down if we were to see the price sustain under this level. Now, some people are always saying, well, what kind of close are we looking for? We're looking for 4-hour close. Reality, the time frame of which it closes sometimes isn't always the best measure. Okay, all the time frame suggests is if we do close a daily below or a 4-hour close below, it suggests that the price is sustained underneath this area of resistance or above this area of support for a longer period of time than if it were to close a 5-minute. And the longer it sustains above, the more possibility we're going to see a continuation of direction. So that's why closes are important, because all it suggests is the probability of directional continuations are greater the higher the time frame close, but there's never actually like 100% confirmation with these closes. So what we look for is we look for, again, breakdowns of this level, and we look for inabilities to break back through. We look for this level to turn to resistance. We look for sustained price action under that area of liquidity to validate these directional continuations. If we look at the flip side, what we are seeing now is we broke through at resistance. We said in the prior video, if we break through as a resistance, we will likely see the bulls reclaim control and push the price action upwards. That is still valid while this area of support now is held. What we can see, we are retesting as we speak as support. So there is a chance we do see a directional continuation upwards into our prior area of resistance, right? At around 70,400, which we can see acted as a major area of support for about, we're looking at about 4 days before we had that bearish news come out and we had that directional breakdown. So again, on the short term, I'm really not sitting here trying to overtrade it. I'm not sitting here trying to predict what's going to happen. React. Sometimes it is best to take a step backwards and be reactive in the market, particularly when we have major economic news coming out. So tomorrow's video, we're going to be discussing this economic news in much more detail, going over some more macro charts and really setting up a plan for the short-term price action. Thanks for watching today, and we'll catch you guys in the next video tomorrow. See you then.